Well, good afternoon, folks. It's Shooter. Hey, we're going to go over Hump Day's report, cover a couple things. First, of course, disclosures. Prior success does not guarantee future performance. Print that, review that at your leisure. Let's start off with TLT today. Looking at the monthly chart, the count suggests that we're going to have some significant downside from here. I don't think we get back up in this range here. I was looking for a push of maybe to 146. We didn't get it. Maybe at best we have a back test of around 140, 150, I think is the range. Jumping down to the daily, 140, 176, excuse me. Then we head towards this golden box range, which we also have a harmonic pattern here on the daily, which pops in there that indicates. Now, on Sunday, my bias was risk off. That was spot on. We did not get the back test that I wanted, so we didn't put a position on. Now we're just going to follow suit here and go right over to IWM, take a look at the monthly. We should be putting in a bottom here soon. Next entry long is about 199.95. Try till you succeed, right? Now, we were looking for a little risk on, didn't get it. I had mentioned we have to get above that B. I was thinking that we'd push, my bias was above the breakout line, chase it long, below the breakdown line, chase it short. Well, we are now below that breakout line. So let's come down to the daily on this and take a look. So that alt count is now in play for me that I was thinking, maybe down to about 191. However, the count suggests that we come in a little bit shallower. Now that I've taken that out, it's saying that we're going to come in around 295 versus that 191. But of course, that 2 was actually very important. We needed to get above that and then get above that 8-day resistance for us to get going in the right direction. Next, taking a look at the Dow. We've got this harmonic here on the daily that is supportive. We haven't broken the count. I mean, we're a little below what the original scan was. I'm going to run it again while I'm live here, so we can see where we're at. Yeah, it's coming in just a tad bit lower, but we still same exact pattern, just not the diagonal. It's more of a leading diagonal versus the ending diagonal, which it looked like earlier. But I would suspect that 8-day holds and or the speed line as far as the Dow's concerned. Let's take a look at the NASDAQ. All right, so with the NASDAQ, let's take a look at the monthly here. We came off pretty good here, and we're down on the lower side of the band on the VIGI strategy. So, our next target, if we break down, would be this 4 at 336. Now, jumping down to the weekly and taking a look at that, just rerunning a scan on that as well, see what it looks like. Count really has not changed. I mean, moved a little bit, but further out. But as far as dollar-wise, did not move. Looking at the daily, now count was down here on the weekly. Count's up here on the daily. So that's your monthly stop long. Take that off. I mean, I would be trimming at least here. Okay, only because, we're right on the 200-day. It breaks below the 200. There's our golden box. Our next entry long is right there. Has not changed as far as making sure there's no labels lower than where I'm at. When you have much, so 361.96 is what we should look at. One more check. That is a little bit lower. So 361.96, we'll go with that. Range low, that needs to hold. We break below that. What's that going to open up? That will open up. I don't have that there. So we are going to put another box there. I'm just going to guess. I don't have my fibs up here. Just eyeballing it, I would assume it'd be down around the 50-day would be our next box. We're below the speed line. this makes it so difficult looking at that. That just screws up all their trend lines downside. I mean, because technically you should come down here and say, this is it. This is your trend line, but you either use the base here, if it's letting me measure the close on that one bar, either your close on that bar or your close on this bar. So you have 3 potential outcomes off of that trend support. So you would be looking at something like this. And hypothetically, I can't tell you which one would be the more likely outcome, because I don't think that is. But any technician, when looking at a chart, has to consider all the outcomes based on the evidence you have. So you really can't negate one versus the other, because all 3 of those are potential outcomes there. Because there's really, outside of this base support right here, we'll pull the speed line off here now. It's broken. It didn't really hold. We didn't even bounce at it. Which is something I don't always put on my charts. Now this is what I would classify as primary support. That has to hold. So we get below 296.41, that band right there. There's actually another band up there. It should bounce off of this upper band here if we do get that low. I don't think it's going to get that low, though. I was throwing my 2 cents in there now. I don't think we get that low. So that's your resistance. That's prior resistance that should become support. Okay, that is the most likely spot. If that box breaks, it's going to bounce there. That would be fairly strong. I don't think that gives way. Not here. We'd need some kind of catalyst to open up this, as far as the timeline. And right now, this range low needs to really break, because that's the, I step down. When you look at these, you have to look at where your breakouts were. So if we break this range low, the next range low drops down to here. And then where's our next breakout, which is right there, right next to it. Then our next breakout's here. So, I could literally come in and do a stair step motion. There's no equality there. And then your next breakout's way the heck down here. Okay. And then your next breakout is way the heck down here as far as you look. So we got a long way to go to, even get into this range. So, I'm going to come in and say, hey, that 3062 is where we need to hold. But I had my range low down here because I wanted to give it some room. Was my thinking, because it still hasn't negated the uptrend. I mean, if you come down and look at your, if you take this right here, this we should have gotten a 50% retrace, so we should have gotten down here to the 50-day. So, you can put a speed line in right here from this close, but let's just be conservative and go to that wick, that off number, and say, this is where our retrace should have been. And I haven't measured it to be exact, but I bet you I'm pretty darn close, just eyeballing it. But that should be our speed line that we hold. That would be the first thing that needs to break. So, all I do is just come in and set an alert on that, and boom, I get an alert there on that chart when that breaks. And then I know that then I'm looking short, because now we have a trend break. So that's how that chart would look. All right, let's jump over to the SPY. Starting off with the daily here, it looks to me like 448.81, a second golden box, which was not there before. We added that back in because I wasn't expecting that much, broke below the speed line. Now it's more than an overshoot, We now have day 2 with a decent wick down. So an ABC equality gives us 449, which is a little different. I'm getting a 5 wave down here, shallow. I don't know if that's accurate. I don't ever like it when it runs shallow counts on me. Whatever formula they're using to do that, won't measure it. $448.61. So that's measuring. So it's measuring an ABC off of, well, it's flat, off of that 473, the 448, 479, and then equality is it's saying because the length of 2 is 448.64. That's how it came up with that number, or close to. Your support speed line's broken. There's an internal line there, which goes next. Needs to hold. So maybe like this, which is right at that box. Precision. And when you work with these, I mean, it really, sometimes they're a pain in the neck. Can't get it to fit. But I want it to be right there so I know. So I just throw alerts up there so I can see it. So 441.78 breaks below that, opens up the next box. That should be a chase lower. Now realize when you're chasing stuff like that, it's at least 50% of the move. So, whenever you get these back tests, so if you're looking at your counts and you're looking at this 5 wave, and this is a leading diagonal, broadening to a shallower 4. Okay, so this is an impulse, also referred to as a motive wave. This is an impulse referred to as a motive wave, and this is an impulse. All right, and so on your impulse waves, you have leading diagonals, ending diagonals, and the impulse waves, which all are referred to as motive waves because they're uptrend, right? But when you're looking at your legs, you have 3 fibs that matter: the 382, the 618, and the 786, as far as measurements about the average retrace. And just like I use my golden boxes to measure retraces, you have different legs because of the wave counts, because of the wave degrees, which are the time frames of the waves. So they're stair-stepping motions, just, like, let me just clarify that since I went there. So when you do a primary wave scan, it's only going to show you your primary waves. Then you come in and you decompose those waves down one level, and then it's going to show your intermediate waves, right? Then you come down and you decompose that 3 levels, right? And then it'll show you your minor waves, right? And so forth and so on as they step down. When you do a complete scan on your chart, you're getting all of your waves based on the time frame that you're in. And each time frame, so if you go on, even though you can't scan a 3-month, you can't even scan a 2-week or a monthly, just because there's not enough data on these instruments, these symbols. But if you scan all the way down, you get different counts on every time frame. And that's one reason I work on multiple time frames, because I look for confluence. It's just like, when I run harmonic patterns, I'm looking for a direction from the harmonic pattern and a range for the outlier, because the outlier only happens, 11 to 12 or 8% of the time, whatever it is. But I still want to look at that potential for it coming. This 3 strikes down, 3 golden boxes down is an outlier. If you come up and you put an overlay with fibs on here, just on any chart, notice that it's down 3 standard deviations away. So, and if you come back out on a chart and you look out on the monthly with the standard deviations, which you can barely see most of the time, how many times has the SPY crossed beyond the 3rd standard deviation? Once to the upside. I don't see one yet to the downside. I'm using this as an example. There's one area to the downside. Otherwise, it's stayed tight within its range. Now, each instrument has a personality. So you have some instruments that cross it all the time and other ones that don't. So you have to look at the history of those charts to see that. And I'm just going to pop this back off for a second, but since I went there, I might as well have spent a second and shown you what I mean when I'm looking at a chart. So on the daily, third standard deviation would be at your second box versus down at your third when you go out to the monthly. So, time frames, you get different visuals. So it's sort of, I call it drilling down because it allows you to see a little bit tighter. But so we're looking for a little continuation in the SPY, and then I think we're done. Hopefully this chat was helpful. Until next time, folks.